Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the trading session dated Wednesday 17th of May has ended. It looks like we might have had a blow off top ending today. We've got a strong upward day with really strong volume. That looks like a blow off top. They're usually followed by at least a few days of sideways movement or a trend reversal. While price remains within the narrow channel on the hourly chart though, expect it's entirely possible it could continue going up for a little bit further. Only when that channel, or both of them rather, is properly breached at the hourly chart level can we have reasonable confidence that upward movement is over and the next wave down is underway. It should be coming very soon. Let's have a look at the first weekly chart. I've got a new one at the end of this analysis with a very low probability in response to a member's query. But this is the first and highest probability weekly chart. The second one also has a very good probability, but slightly lower than this one. All my weekly charts see a cycle degree A wave over here as a 5-wave impulse. I also do have an alternate at the monthly chart level. To look at that, you'll have to see historic analysis. If cycle A is over here, then cycle B begins. Cycle degree waves usually last 1 to several years. My third alternate, which I'm not publishing on a daily basis, sees cycle B over here as a very brief shallow zigzag. That's possible, but it's very unlikely. What's much more likely is it's going to be a big sideways complicated combination, flat or triangle. So far we have a zigzag up here, a zigzag down here that is less than a 0.9 length of this upward movement, and so we can't relabel this A, B, C unfolding as a flat correction because B has not met the minimum requirement of a 0.9 correction of A. And so I'm looking at a possible double combination here now as the most likely structure for cycle wave B. Double combinations are really common structures, and the most common combination of corrective structures within the double is a zigzag and a flat, usually with a zigzag first and a flat second. So this follows a really common corrective structure for a B wave. So we've got a zigzag in the first structure of the double combination labelled primary wave W. The double is joined by a deep X wave in the opposite direction, a zigzag labelled primary X, and this is where the second structure in the double combination begins, and it's most likely going to unfold as a flat. And from this low to this high, this upward movement does look very much like a 3-wave movement. We want to see a B wave in here because that gives it a good proportion. It looks like a 3. And so if primary Y is unfolding as a flat, then we may have a zigzag complete for the A wave and now need a zigzag down for the B wave to be a minimum 0.9 length of the A wave. The normal range for B waves within flats is from 1 to 1.38 the length of the A wave, so that gives us this common range for further expected downward movement. So far, intermediate B looks like it's unfolding as a zigzag, A, B, C, and within it, if it is a zigzag, the B wave can't move beyond the start of the A wave above 1294.96. When B is over, then I'll calculate a target for C up for you. It's very likely that B can make a new low below the start of A as in an expanded flat. The target for C will probably see primary wave Y end about the same level as primary W at 1374 because the purpose of double combinations is to take up time and move price sideways. To achieve that purpose, the second structure in the double usually ends pretty close to the same level as the first, and the X wave within a double combination to give it a big sideways look is usually really deep. So far, this wave count looks like a pretty typical combination unfolding. Let's have a look at the next idea where cycle A is over here and cycle B begins, or cycle wave B could also be a triangle. It would be either a barrier or contracting triangle, and for both of those it would be a regular type. The first zigzag up could be the A wave within the triangle, the next zigzag down the B wave, another zigzag up for a C wave looks likely to be over here, so we'd be looking now for a single or double zigzag down for D, and then a final single or double zigzag up for E. D of a regular contracting triangle can't move beyond the end of B below 1123.08. D of a barrier triangle, can move slightly beyond the end of B. As long as the BD trend line remains essentially flat, a barrier triangle would still be valid. As soon as D moves reasonably below B and the BD trend line starts to have a downward slope, then we should discard the idea of a triangle. Now, unfortunately, that's a little bit subjective. It's not black and white. That is the only Elliott wave rule that is not black and white. In my 9 years of daily Elliott wave analysis, my experience shows me that triangle subwaves quite often have a depth of about 0.8 to 0.85 the length of the prior subwave. That's what seems to give the triangle trend lines a normal looking slope. So that's why I've got this common range of 1157 to 1149 for some more downward movement for primary wave D. So both the main wave count and the second one are expecting a 5-3-5 zigzag to complete downwards. So the subdivisions at the daily and hourly chart level are exactly the same. So I've only got one daily chart for this idea and for this first weekly chart, where this high up here is this high up here. Now the daily chart will follow the labelling for the first weekly chart, but the idea is exactly the same for the second. We're looking at a 5-3-5 to complete downward for a zigzag. For the second weekly chart would be labelling this primary wave D, but here for the first weekly chart we're labelling it intermediate wave B. The subdivisions are all the same. So far we've got what looks most likely to be a 5 down here. This could be the wave A within a zigzag. It looks like we might now have a complete B wave. We don't have any reversal signals yet, and we don't have any trend channel breaches to give us any confidence in this idea, but I'm going to label it possibly over today because of the strong blow off top with really strong volume. That's what that looks like. Minor wave B has also reached up very, very close to the 0.618 Fibonacci ratio of minor wave A, and it's finding strong resistance about 1260, which is a previous area of strong support and resistance off to the left of the chart as well. However, while it remains within channels, which you'll see next on the hourly chart, we absolutely have to allow for the possibility that a high isn't quite yet in place, and price certainly could make another couple of slow little further highs and move up. If minor B does continue higher, it can't move beyond the start of A because A subdivides as a 5 above 1294.96. If minor wave B is over here, then a target for minor C would be 1133, where it would reach 2.618 the length of A. I'm using that Fibonacci ratio. This follows again the first weekly chart. The second one would not have a target this steep. But for the first weekly chart, this is the ratio I'm using so that this minimum requirement for intermediate B to reach 0.9 the length of intermediate wave A is met. So this target brings it below the minimum. This is the end of that 5-wave impulse down for minor A, and this is the start of minor B. If minor B is over today, then it could have completed as a relatively quick, sharp zigzag. And I did warn at the beginning of minor B, back down here, that it was impossible at its start to tell which of more than 23 possible corrective structures it could take. It was most likely going to be a big choppy overlapping sideways movement, but it could have also been a quick sharp zigzag, and it looks like that might be what has happened. So we could have a 5, a really brief shallow 3 here, and another 5 up here. This is the blow off top, and C waves can behave like third waves. For commodities, third waves very commonly end in blow off tops, and so this also could be a C wave. The invalidation point is still quite a long way away, and we still don't have any confidence that we do have a high in place. If it's not here, I do expect it's going to be coming up pretty soon, but I want to see this channel properly breached by a full hourly candlestick below it and not touching this lower trend line before I will have any confidence in my labelling of a high in place. This chart comes with that very strong caveat. If we get a clear breach of the lower best fit channel, I will have substantial confidence that we've got a high in place, and we'll have confirmation of it with a new low below 1214.81. At that stage, we can have a reasonable amount of confidence in this target, but we'll also be looking out for that second weekly chart to be possibly correct, and not as deep a fall as this target suggests. Alternatively, This is again where minor A ends and minor B begins. It's also possible that minor B is not complete, that the blow-off top is going to be followed by just a few days of choppy, overlapping sideways movement before another final high. And this is also entirely possible. Blow-off tops often end at the end of a long trend, but sometimes they come just before the end, and then we see a bit of a consolidation and then a slower end. So this is entirely possible. It does look from this low to this high with the blow-off top here like this is a typical end to an impulse rather than a zigzag. That would be a little bit more likely. However, I'm going to give the first hourly chart a higher probability for a few reasons. Upward movement is getting really close. It's almost touched the 0.618 Fibonacci ratio, and so it would be likely that minor B is going to end there. It could be deeper, but that's a pretty common place for a B wave to end. Have that blow off top, which could, with those other 2 points in conjunction, signal a reversal. But what if we don't get a big reversal? What if price just starts to move sideways? And this would be the wave count I'd be using. I'd be expecting a few days now of choppy, overlapping sideways movement, maybe to find its area of support about the 0.382 Fibonacci ratio of minor A, which is about 1245, to move in big overlapping sideways movement for a few days, and then a final upward wave to move beyond the end of A. This is also entirely possible. If A is a 5, then B can't move beyond its start below 1214.81. At the weekly chart level, this wave count is published only in response to a member's query. What if the strong week and that strong upward day is the start of something bigger and not a blow off top? What if it's the start of a good, strong, sustainable upward trend? We would have this possible morning doji star here to give us a trend reversal, but it hasn't come after a very long downward trend at the weekly chart level. This is only a couple of weeks really, so that's really more within a sideways movement and not necessarily at the end of a downward trend. If we see a new high above 1294.96, then that would invalidate the first 2 weekly wave counts at this stage. That would give us confirmation of this new alternate. Only if that happens would I then publish this idea on a daily basis. This idea sees cycle wave B as a double zigzag. I haven't looked or haven't published this idea before because it has a low probability. It has a low probability because this X wave is so deep. I think it's a 0.77 or 0.74 depth of this first zigzag up. Double zigzags, although they're labelled WXY, have a very different purpose from double combinations, which are also labelled the same. A double combination has a purpose of taking up time and moving price sideways, which is the same as triangles, but double zigzags are very different. The second zigzag in the double exists to deepen the correction when the first zigzag does not move price deep enough. Now this first zigzag did not move price very deep, and so this is possible we could be seeing a second zigzag to deepen the correction. Double zigzags, because they deepen the correction, usually have quite a strong slope against the prior trend. In this case, the prior trend, cycle A, was down. So if cycle B is a double zigzag, it should have a strong upward slope. For it to look like it has a strong upward slope, the X wave should be relatively shallow, usually also quite brief as well, but more importantly, it should be quite shallow. This one definitely isn't. It's 0.74 or 77 of primary W. That's not shallow at all. So this just doesn't have the right look. It's technically possible, but the depth of this X wave reduces the probability of this idea substantially. That's why I'm only going to give it serious consideration if price tells us it's likely, with a new high above 1294.96. And so, as you can probably tell by now, the bigger picture, because price for gold at the moment is in a cycle degree B wave, the bigger picture really is quite complicated, which means the smaller picture can get complicated as well. There are more than 23 possible corrective structures that B waves can take. They exhibit the greatest variety in structure and behaviour of price of all the waves. I say more than 23 if you count all the possible combinations, doubles and triples. It's impossible until you get quite close to the end, even if sometimes right at the end, to tell with any degree of confidence exactly what structure a B wave has taken, and so it's absolutely important to be quite flexible and have alternate wave counts while they unfold. Let's have a look at some classic analysis. I'm not going to go over the weekly chart as well at the moment, although I'll do that in the next video in a couple of days when this current week, or the next week rather, has completed. So far it's got a good strong green week. We did have this bullish signal with a bounce off support here at the weekly chart level, and we were expecting some upward movement this week, and the 0.618 Fibonacci ratio of this fall down was the final point where we expected it could end, and it's at that now. So let's have a look. Here's our very strong upward day with a really good strong increase in volume. This is the strongest volume we've had for quite a long time. Because that volume is so strong, I'm going to say that this looks very much like a blow off top, coming after overall a little bit of a decline in volume from the beginning, and until today the upward movement had lighter volume than previous downward movement. Until today, this movement looked quite corrective compared to this movement, which looked like it had more support from volume. Today it looks like the upward movement might be over here. We might see either a consolidation after the blow off top for a few days, or we could possibly see a reversal. There's also some bearish divergence. On balance, volume has made a new high, but price has failed to make a new high beyond this point. That tells us that within this upward movement there is some weakness, and that's exactly what we would be expecting to see. If this is a B wave, we should see some divergence somewhere. There's no divergence though between price and RSI. We're only seeing it with on balance volume. RSI returned from oversold. It isn't yet overbought, so there is still further room for price to rise, and stochastics isn't overbought. There is still room for price to rise. If it does continue further, then the next resistance here about 1260, next resistance is right back up here about 1295, quite some distance away. ADX today indicates a possible trend change, but the black ADX line is still declining, so it's not yet telling us that there is a new upward trend. It is a lagging indicator. It's based on a 14-day average. And here was another cause for concern until today of that upward movement. While price was moving higher, it was coming with declining ATR. Normally, a healthy trend should have an increase in range, not a decrease in range. This one day of good increase is not enough to tell us that this trend has changed for ATR. It still looks like a blow-off top. And here's another cause for concern. While price was rising, Bollinger Bands were contracting during this rise, and even for today, this very strong session, Bollinger Bands contracted just a little bit further. This upward movement lacks increasing volatility, and it lacks, until today, increasing range. Now that looks more typical of a counter-trend movement than it does a new healthy trend. Price did not find resistance at the 200-day moving average. It sliced right through and it's closed well above. It may very well be finding resistance at this previous area of strong resistance and support, which is about 1260, maybe a little bit higher, about 1265. In this little zone about here, there's quite a lot of resistance for price to overcome here. GDX also looks a little bit concerning for this upward movement. We had a breakaway gap here. We used a measuring rule to have a target that was reached around about here. This gap initially looked like a measuring gap until it was closed by the wick of this candlestick, and then it looked like an exhaustion gap. And we got a little bit of sideways movement, so another small consolidation, and now we've got another upward day, a higher high and a higher low. Even though the candlesticks closed red, this completes a spinning top candlestick pattern. That's not a reversal pattern, it just indicates a change possibly to neutral. It indicates a balance of bulls and bears. The upward day had a reasonable increase in volume, but really not enough to say it's a blow-off top. It could be a smaller blow-off top, and the red colour in the spinning top candlestick pattern, in conjunction with some increase in volume for an upward day, looks like possibly a small blow-off top within the day, and now it's over. On balance, volume gave a pretty good bullish signal here. It remains bullish and there's still some distance to go before it's going to find resistance. ADX is today finally increasing, telling us GDX is in an upward trend. It's been in one for the last, I think, 9 sessions. ATR overall still declining, so that indicates that this upward movement is more likely to be a counter-trend movement. It does not come with an increase in range. It comes with a reasonably steady decline in range. Stochastics is now overbought. Bollinger Bands also for GDX as price moves higher are contracting. That's more normal behaviour during a consolidation or a counter-trend movement than it is during a healthy, strong trend. We might be finding some resistance about the upper edge of Bollinger Bands today. So overall, it looks like GDX may be finding some good resistance here about 23.50, forcing the spinning top candlestick. If we see a candlestick above that, though, I'd be looking for more upward movement to continue for GDX until it reaches about 25, but it looks like it may be running out of steam here. That's all from me at the end of the day with your extra video update. I hope all our members are having a fabulous day.